So let's begin with this Fed-fueled rally, Jim. We said yesterday the coming 24 hours would be key.
Well, I have to tell you, I was surprised at how sanguine he is. I think you'd have to own that. I mean, I've been saying that he's going to do a soft landing, so I was not off base. But I did think that he showed a level of flexibility that is unusual for Fed chief. Usually like to just leave it that way and just see how many people get hurt and then take action. And he didn't do that. You know, David, there's an element of this man which is unpredictable, even as he looks like he's completely predictable.
Does that make him exciting?
No, he's definitely not exciting, but he did take a shot at the Bears. Did you hear what he said? He said, oh, yeah, and those who thought we were going to have a recession, they were wrong. That is it. He showed something right there. That was the quote.
Are you in the camp now that says, all right, you know, the focus is now not just on inflation any longer, but also on employment? And the dual mandate, the second part of it has now come to the fore?
I was surprised because there really doesn't seem to be any reason to worry about employment yet. But you've got Goldman, a faster return to the 2% target means faster cuts. Bank of America, a holiday gift, the dovish pivot arrives. Deutsche Bank, Powell breaks out the punch bowl. UBS, next up, rate cuts. I mean, these are all the things which just say, don't abandon the market, but rotate into other stocks. And that's what everyone has to do. And, Carl, no one wants to go buy Regions Financial or Zions, but when you get a percentage move in these regional banks I'm talking about, when you get a percentage move in these things, I mean, it's much bigger than what you'll get from my dog, NVIDIA.
It reminds me of Bill Gross's tweet yesterday. Said that your bond strategy should now be looking at a positive curve, a stronger curve. Says REITs, the KRE, is like the 49ers trashing the Eagles. Did you see that?
No. I didn't see this. They had enough of most of Dallas. I was there, looked at that big scoreboard, screaming at my wife. She didn't deserve it.
So what? Wait, what is
probably a little too much information?
Yeah, focus on return to positive yield curve. Great day for the curve. Regional banks, mortgage REITs up 4 to 5. Kicking butt.
Oh,
well, Shantanu Narayan said, are you going to come to the Niners-Eagles game? At least he, even though the stock was down huge, at least he showed some respect.
Kicking butt. That's what it was. Got it.
But
Just
David,
wanted to make sure I understood.
David.
Yeah,
okay.
Sorry, what is it?
In your world.
My world, yes.
In your world where...
My what? My world of M&A? What is my world? Which world are you thinking of?
Restructuring, M&A,
yeah.
PE.
PE.
I'm going to give you one. And it's just going to shock you.
Tell me.
David, people want to buy Warner Brothers Discovery.
They want to buy the stock?
Yes, they do.
Because leverage is going the other way.
Yeah.
I mean, or refinancing risk
right,
is
let's
getting...
buy the worst.
Refinancing
let's
risk
buy the
is
worst
going
balance sheet.
down.
Now, of course, David Zaslav would not say it's a bad balance sheet.
No, he wouldn't. He would say that, hey, we're going to get down to 3.8 times leverage very quickly, and we're generating a lot of free cash flow, and it's the usual.
But I'm getting a lot of calls on the lightning round about this stock.
Are you about the stock?
Yeah.
Well, but we've made the point that those companies with levered balance sheets and or a lot of refinancing risk have benefited over not just yesterday, but over the last 6 weeks.
Sure.
Since we had the significant decline in rates, right? We've come down 100 basis points on the 10.
Oh, no, absolutely. But I think people are trying to find stocks that really haven't had big moves that do. Well, look, Ford and GM. I mean, GM, the story today should have been that they laid off 9 senior executives at Cruise. But instead, it's going to be margin expansion. And rates coming down, people will buy more cars. And it's just a very positive story. That's what you rotate into.
By the way, it's a positive also for M&A.
Yes.
You know, the idea
that's why
your borrowing costs, of course, are going to be less. It makes your return parameters higher. It makes you perhaps more likely to do a deal you might not otherwise have done, or be able to actually round up the financing that you need. Not saying we're going to see an avalanche of sponsor-led deals, but it helps. It all helps.
Well, David, I'm going to give you a quiz because I know you like quizzes.
I do. I love them.
Of the Mag 7, also known as Magnificent 7.
Yes.
Which stock actually went up after the Fed made the announcement?
They all went up.
No, they all went down.
Oh, they did?
Yes, except for Tesla, which is viewed as a rate play. They all went down, and that was the tell. That was the tell. right there.
That what, we're going to broaden out now?
Yes, we're going to broaden out. I mean, Microsoft was up huge, then it came down. NVIDIA was up huge. David, I mean, Apple held in there, but Tesla went...
They all went down other than...
Yeah, they all went down. Well, that's kind of what I do for a living.
I know. Well, I barely pay attention after 11:30. You know that.
I was wondering what you did at 11:30.
Yeah. I'm enjoying my life.
We got
Sorry, Carl.
89% of the S&P now above the 50-day. That's the highest percentage of the year. Just speaking of broadening out.
I think that Larry Williams, who's my best historian, who said that November would be great and then December would be unbelievable, is saying, listen, enjoy it. It's not going to be a picnic when we get to January. He's looking at cycles, at market history. And when he came on, he said November was going to be great, December's great. I was like, oh, really? And it was the best call I've seen of anyone in this market. Even Ed Yardeni. Larry Williams, of course, is the oldest historian, and he does great work. I wish Marty Zweig were alive. He was the greatest guy. But he would say, don't fight the Fed. Fed's on the canvas. You're not fighting them anymore. Oh, how about the soft landing? Your trade tables are up, Dave.
You don't have to work. You can actually keep them down because it's going to be so soft.
Well, I know that I've taken off my seatbelt.
The luggage in the overhead bin.
Yeah, I'm on the jetway.
Yeah, today's meeting points to dovish risks to expectations of just of 3 rate cuts already next year. That's kind of what I mean. That's right. Deutsche Bank
how about
again.
The press immediately saying, "Well, I mean, there must be something wrong. This has to be bad. I mean, why are you doing this?" I mean, the press is so gloomy.
Well,
the press has never owned a stock.
Well, 2 things. One is that, as the wires point out today, the Fed rarely cuts at a measured pace.
Yes.
Compared to the hikes. And then Citi today, Hollenhorst says bringing forward the rate cuts doesn't show that a soft landing is in progress. It shows how difficult it's going to be to engineer a soft landing.
And the Journal said that. And what that says is a guy, let's go back to the Niners example, okay? Like, this guy has won. So why do we think he can't win in this? I mean, no one thought he could get to this point. Think about where we were in November 2 years ago, okay, when you had that new strain of COVID, and he didn't raise rates, and we had all these billionaires come on and say, he's the worst. The billionaires have been silenced, or they're focused on colleges.
Yeah, well, they are indicted.
It's still hard, though,
what?
Jim. It's still hard, just because the climb,
he's a good pilot.
You're almost at the summit. It doesn't mean that that last bit where the oxygen gets really thin, you're going to make it.
Yeah, but he's been good so far. I mean,
or maybe you're 10-1, and then in week 12, 13.
Look, this guy has
a little
home
bit
field.
of a rough patch.
He has a bye.
You don't even make the playoffs.
He's got home field advantage. Okay, a bye and home field advantage. That's almost always guarantees a spot in the Super Bowl. He's got home field advantage. This guy.
How about Super Bowl SoFi Stadium 2027? That's going to be fun.
I say Vegas is fine, but I just think that I got to give him credit. I do think that I've been working on his housing thesis. And I think what he did was he pivoted. He realized that every time he raised mortgage rates, all that did was make it so anyone who has a 3% won't do it. So if he lowers mortgage rates via this, then they will have rates that are not so disparate. So they would go and put their house up for sale. It actually may work.
To lean into the soft.
Yes, I think it's a work of genius. I didn't think you do. I mean, that makes so much sense. You need to get those people off the schneid and starting to sell their houses. And the only way to do it is to lower rates. But why wouldn't Toll Brothers buy 20 million shares when they saw that?